presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. It is Fed Day. We have a decision, and markets accelerating to the upside right now. We have the S&Ps up 87 points. That's 1.54% in the green. You see the acceleration right out of the gate. We get the announcement at 2 p.m. Eastern Time. They keep the rates where they are, but they are looking for more inflation. They're looking for slower growth than was anticipated prior. And they're looking for higher unemployment. They're looking for about 2 cuts through this year, and they're actually going to slow the process of the balance sheet. And we'll get into all that, but markets rejoicing, and we got an acceleration. S&Ps up 1.6%. NASDAQ 100, how about 2% on the dot? 20,098. We're up by 396, make it 400 points in the green in the NASDAQ 100. Dow right now up 1.3% or 537 points in the green, 42,477 in the Russell, up by 2% as well. Bitcoin trades with growth stocks on many occasions right now, up $3,700. You see the acceleration, even since that 2 p.m. Fed, right? We just jumped from 84,000 to 86,000 in Bitcoin. Crude, some volatility today. We almost make it down to a 65 handle. We're trading at 66.09. We make it to 66.09. We're trading at 67.02. And yeah, let's get to the all-important yields and currencies. You talk about it, man. Higher price, lower yield. The market's reacting dovish right now, and it would make sense because we're going to go over the headlines, but you got to consider if the Fed thinks that inflation is going up, growth is slowing, unemployment is rising, maybe it's time to cut, being the logic. We have higher price, we have your lower yield, you have the 10-year back at 4.25% right now. You're up by, 9 ticks, but boy, you have higher price, lower yield. That's the 10-year. You jump over to the 2-year right now. Higher price, lower yield as well, and we have the 2-year. That is a mammoth move for the 2-year, going up 8 ticks, and the 2-year right now down 7 basis points. Here's a yield curve, just giving you where we are, and yeah, on that 2-year, the biggest move out there. The 2 years, it would make sense. Where's the Fed going? That's going to give a good indication of where your 2-year yield is going to be. The 2-year down 7 basis points. We're under 4, 3.97%. The yield on the 2-year. All right, let's jump to some of the headlines. You know what? Before we do, we got to get to the dollar and we got to get to gold. The dollar. Yeah, that is a move, man. And what is going to happen? So what do you have? You have yields dropping. You have dollar weakness. You have market strength. And we'll see if this takes hold, man, because, hey, what do they say? Don't fight the Fed, right? Now, what is the Fed telling you? The Fed's telling you this is what we think is going to happen. Really not that great, their prognosis. They do keep rates where they are. But as I said, maybe a little bit dovish. Seems like they're ready to act considering what they predict is going to happen in this economy. So we have lower yields, and that's weakening the dollar right now. We're at 103.41. That's a 5-minute. You put the dollar on a daily, it's a critical level. Right back to where we were in October. You make a low on that dollar on November 5th. We're right back to chopping around there basically since March 7th. We've been down there for 12 days. Dollar might have a potential to break lower if this is the trend, and this may be the trend when you consider the numbers. And we jump over to gold. How about it, right? Gold, having a moment, man. You got to love it. And it is remarkable that gold sustained such strong prices when we had all of that dollar strengthening, right? The whole run we had in the dollar. Folks, the dollar was at 100 almost in late September. And the dollar traded all the way up to 110. Gold sustained. And now as the dollar has weakened, gold's really caught that second win. There's your daily up to 3,061. And there's your acceleration. Gold up another $20, $25 almost. Look at that run, man. Yeah, up another $20, $25 on that, man. 3,060. Gold may be running at 33.50, man. Gold, check this out. You take a look at the daily on gold. The run starts. I'll put it on a weekly to encompass the whole thing. You're looking at a possible 1-to-1, A to B, C to D. You know, all it is replicating the move you did originally. You trade from 2,000 up to about 2,800. You get a little bit of a break, and then if we do it again, you're trading up to 33.50 right there, a 1-to-1 move. And nothing saying that can't happen if this is what's going to ensue in terms of if we have a dovish Fed, if we have yields dropping now, and a weakening dollar, that's a nice recipe for gold right now. All right, let's look at some of these numbers. The headline, they hold the rates where they are. That rate, 4.25% to 4.5%. That's the target range where the Fed is right now. They come out with a dot plot. They're looking at about 50 basis points of cuts coming down the line expected this year. Now, here's the meat that I like in here, okay? You get fresh economic forecasts. They raise the median estimate for so-called core inflation. That's going to strip out food and energy to 2.8% from 2.5%. What happened to getting down to 2%? Okay? Yeah. And at the same time, their outlook for 2025 economic growth down to 1.7 from 2.1. So their inflation target up 0.3%. Their growth target down 0.4%. And their unemployment target now at 4.4 from earlier. They saw 4.3 in December. You combine those, and then the last one, they are going to shrink the balance sheet at a slower pace until the debt ceiling deal is reached. I don't see a lot of strength in those numbers, but here's what the market sees. The market sees, hey, guess what? Fed doesn't see a lot of strength right now. Maybe we're going to get some cuts coming down the line. We will find out. Some talk of tariffs in there, of course. Very difficult, the chairman. I was listening to him talk in the press conference right before the program. We were airing that live right here on TFNN, as we always do. And, yeah, interesting to see him taking basically the stance, and you got to understand it, because he says, you know, it's really hard to figure out when you're talking about prices, you're talking about inflation, is that market or is that tariffs? What is the contribution level? Very difficult to shoot from the hip on that one when you're looking at inflation going up, growth going down, unemployment rising, and the market rejoicing. But the market rejoicing right now that bad news is good news. And is that going to be the trend again? Right? Bad news is good news. We got bad news. Higher inflation, lower growth, higher unemployment is not good news. It is good news if it's going to allow the Fed, right, to go back to the dovish stance that they plan on taking. And remember, that got recalibrated for a bit because inflation has always been present, and they got a lot of work to do. But we got markets in positive territory, and we got a treat coming up. We got our man Elliot Wallenbach from Direction, Senior Vice President with Direction. We're going to talk some ETFs over there. We're going to talk some China. We're going to talk some gold, folks, as well as some other equities, NVIDIA in there as well. Stay tuned. We're coming back with Elliot. Don't go away.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We have the S&Ps up by 88 points right now. NASDAQ 100 up by 376. It's Fed Day. And, folks, if you head on over to the front page of TFNN, you'll see those beautiful banners up there from Direction. They have an outstanding lineup of ETFs. And, man, we got a day going on to talk to our man, Elliot Wallenbach. And Elliot, folks, is Senior Vice President, Institutional ETF Strategist with Direction. And it's great to have him back on. Elliot, welcome back to TFNN.
Hey, thank you for having me. Excited to be here again.
Boy, I love that we always have you guys on Wednesdays, and it seems like they line up so well when we have some market action. The Fed, just to touch on it, obviously with the action, they keep things where they are, pretty much expected. We were chatting earlier in the week leading up to this, but boy, pretty interesting, right? We get a pullback in yields, maybe a little dovish. We have some dollar movement, and I want to talk some gold if we can, because gold yet again charging higher as we speak. Elliot, what are we at right now, man? $3,055, all-time highs today yet again. For those investors, we got a lot of gold bugs. You guys have some great products. What do you think about this gold run? And talk to us about trading the miners with some of the products you guys have.
Yeah, no, definitely. Like you mentioned, hitting records, above $3,000 an ounce. We're definitely seeing that driven by kind of a haven for demand demand haven, as well as central bank buying. Also mix of a gloomier outlook for the U.S. and even the global economy. And you even mentioned, $3,000 was a strong resistance level to break above. Even though it did break above, that might not necessarily signal a decisive breakout. We'll see where that goes, but definitely some tailwinds behind it. And we do have, daily leveraged gold miner products. We have NUGT, 2X Bull, Dust, 2X Bear on the gold miners. And then we also have our junior gold miners, both 2X, JNUG, and then JDST. And we've seen the miners actually outpace gold this year as a proxy, traders using as a proxy for gold. The gold mining stocks, the indices, they're up double digits over this month. So we've seen a lot of trading pick up in the gold miners, and something that we always like to see with the gold miners and with trading our products in general. When there's a nice strong run up in one of our leverage products, we actually see outflows. So Nugget, the 2X bull product on our gold miners, was in the top 10 of outflows last week. So that's traders, locking in profits and taking out. And then sometimes we see some rotating for maybe a short reversion to the mean.
That's great information. I have it up on the chart, and we talked about gold 3,000. Pretty amazing, even Nugget. And I know it's a daily investment vehicle. It's a leverage vehicle, but we are right back to where we were in October at that $60 price on Nugget, and that's after being at $35 to start the year. So can't blame a little profit taken from 35 to 60. But I don't know, with where this is shaping up, this is my opinion, but I think, things are lining up. Gold looks, every day I wake up, it seems like, Elliot, and gold is pushing new all-time highs right now for some time. It's been quite a year for gold and these markets. Speaking of, how about China? Can we talk a little China in terms of focus and volatility? Again, some great products. What are you seeing out there for traders out there trying to gain some exposure to what's going on with the Chinese equities?
Yeah, no, definitely. I mean, we're seeing a growing bullish sentiment around China and kind of a, at least short term, a little correction or bearish sentiment around the U.S. China had a consumption, investment, industrial production exceeding estimates to start the year. It's just signaling resilience to the economy. Along with the broader promise for increased fiscal spending from the Chinese government, that's really helped, boosting China, along with some of the stuff we saw earlier in the year around DeepSeek, the AI competitor, low cost. So a lot of catalysts for coming out of China right now. We do have a handful of leveraged and inverse products. We have yin and yang, which are both 3x bull and bear ETFs, and just give again a little insight into the flows that we're seeing. Yin is the bull product on the China FTSE 50 3x product, and we saw the largest outflows in that last week out of our entire suite. So again, that's traders locking in profits from maybe a couple weeks before, and Yang, the 3x bear product, saw the largest inflows across our entire suite of ETFs. So again, a little bit of looking for a correction or a short-term down movement within the Chinese equities. And then we do have a few 2x products. We have CWeb, that's our China Internet Index 2x, and then Chow 2x bull China A shares. So we've seen a lot of activity across that entire suite this year.
That is great information, man. The inflows, outflows as traders, price and volume is what we love here, man. And that volume, those shares, what are people doing? And that chart of yin, I can't blame it. As in, if you're taking profits, I thought the gold ones looked pretty great. Boy, yin, we were below $25 earlier this year, and I got it at $51 right now. Quite a run for those Chinese equities. And then talking individual equities, NVIDIA had a showcase event. I know you guys have some single stock ETFs, which are all the rage these days, myself included, in terms of exposure on the upside, the downside. Tesla jumps to mind, but NVIDIA, I know you got NVIDIA, Micron. Are you seeing any action there for the single stocks? Because some of these equities are, we see it every day, but the volatility is remarkable right now, even in some of these, especially in some of these single stock performances.
Yeah, definitely. I mean, Tesla, that's been in the news a lot, especially this week with Chinese competitor BYD, unveiling their new fast charging technology. Tesla stock alone is down right over, I think, 40%. I haven't looked as of today
Amazing.
yet.
Yeah.
But TSLL, which is our 2X bull daily product on Tesla stock, that has seen the largest inflows year to date by far across our entire suite. So as Tesla has really fallen down, that's traders trying to kind of buy the dip there.
Sure.
So looking for a short-term reversal. We also do have single inverse to Tesla, TSLS. And we have that across all of our suite of single stock ETFs. One notable, you mentioned NVIDIA and also Micron Technology, that stock, MU. They have earnings tomorrow. We have 2X bull MUU and single inverse bear MUD. So nice. Those earnings are coming out tomorrow. Right now, The options are implying about 11% move either up or down, post earnings. Again, that's not necessarily going to happen, but the options market is implying that type of move in either direction. So it will be really interesting around that. And in addition, we do have NVIDIA. They're hosting their annual GPU technology conference this week. And we had that's always seen as a positive catalyst for NVIDIA, at least over the past 4 years. We'll see if that continues as a trend for their 5th year this year.
Pretty awesome, man. I really appreciate you digging into those numbers, getting them ready, bringing them on the program, and we'll see if this is a dip. So it seems like a little profit taking, a little rotation from those numbers, and we look forward to talking to you again, Elliot, next month. We'll see what people are doing in those markets, and thank you again for the time that's coming on. We look forward to it, man.
Hey, thank you for having me. See you next month.
Let's check out the beautiful lineup of Direction ETFs. You can click that banner right on the front page of TFNN. Stay tuned. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. Great interview with Elliot. Always appreciate talking to him. Those inflows and outflows, remarkable information when you talk about gold, right? You talk about China. Both of them, heck of a run to start things. And what are we seeing now? Not only just outflows, but you're seeing outflows on the bullish side, and you're seeing inflows on the bearish side. They're not even taking trades off. They're literally flipping it the other way. We'll see. Markets, we pull back quite a bit. That was a quick 40 points in the S&P since I jumped on the air. We're at 57.70. We're at 57.38 right now, still positive by 1.2%. NASDAQ 100 up by 280 points. A little bit of a give back. Going to be an interesting 30 minutes in the trading day. As we know, Fed Day, always continued volatility as the market tries to digest what this means going forward. And yeah, speaking of, I don't want to use up the time I have with Elliot just to go over it, but click on that banner on the front page of TFNN, folks. When we talk about those single stock ETFs, right, you're talking about Apple, AMD, Amazon, AVGO, Broadcom, all right, Berkshire, Google, Meta, Microsoft, Micron, Netflix, NVIDIA, Palantir, Tesla, and Taiwan Semiconductor. Pretty remarkable. And I'm sure it's just going to continue to grow from there. They have a lineup of some great. They're the China ones that Elliot was talking about. You got the CHAU. That's the CSI 300 index, bull 2 times. C-Web, the internet one. You got some others as well. Brazil, emerging markets, India. Yeah, check it out. They're a great sponsor, and regardless, they get some great products. And then, of course, you got gold, right? Nugget, Dust, and then the juniors, JNUG, JDST, among many others. And yeah, you talk about a run, man. And it is remarkable that gold, having a moment, to say the least, you run from 2,600. It's been almost a straight trip. You had a little consolidation for a period of about 5 weeks, right around 2,900. And as I talked about, okay, as I've been talking about, put it on your chart, folks. You love to see a breakaway with some real volume, okay? And check out the day you did it. The first day we hit 3,000, March 13th, last Thursday. Gold futures trade up to 3,001, and look at that bar. We get wide price spread. There's the volume bar. You do 236,000 contracts. That's the most volume you've done since January 21st. You break out of that area, and that's why I think this might be the beginning of a next run on golds, because that's a strong breakaway, and the way things are lined up right now. We check back in on yields. Yeah, the market gave it up, but yield's not giving it up at all. We got lower yield with the 10-year at about 4.25%. All right, dollar did catch a little bit of a bid, though. Maybe that's what recalibrated the market a bit. Dollar at 103.566, continuing to break through that chop area of about 103.30, no matter what it is. We're in that range. Important area for the dollar. Okay, jumping back to the Fed. So, headline number out there, of course, they keep rates where they are. They're looking for about 50 basis points of cuts coming down the line. What they're also doing is they're shrinking the balance sheet at a slower pace. Okay, they're still shrinking the balance sheet. They're trying to do this quantitative tightening since 2022, but they're slowing it. The last time they slowed it was last year. I want to say June. They have it in here. Where are we? The last time, it's in here. It's June of 2024, I believe. So now what they're doing is they're only going to allow $5 billion, right? Millions doesn't exist anymore when you're talking about the Fed. $5 billion to not be reinvested, which would, in theory, roll off the balance sheet. Okay, that's going to shrink their balance sheet by not reinvesting the money. They'll lower the cap on how much is allowed to mature without being reinvested to only $5 billion. That means all the other complete part of the rollover is just going to be reinvested. That's no tightening. So that's a loosening. Okay? They didn't cut, but they loosened things up in terms of quantitative easing and quantitative tightening. That matters, folks. It does. Now, that's for treasuries. The mortgage-backed securities currently, that cap is at $35 billion. They're going to continue to allow that to happen. And yeah, there it is. June of 2024, it was at $60 billion. So in June of 2024, they were allowing $60 billion every month to roll off the balance sheet. I remember this being like, man, It's just an amazing number when you think about how quickly they have to tighten. But guess what? Why are they doing that number? Because reserves are currently at $3.46 trillion. Yeah. It is quite a number, man. No, there it is. Reserves are $6.8 trillion portfolio of assets. Oh. So they are trying to shrink their $6.8 trillion portfolio of assets before cracks start to appear. They're trying to shrink it, but what are they doing? They're slowing down how fast they're shrinking it now. Whew. And yeah, they haven't said much about when they'll stop reducing their balance sheet. January, however, revealed policymakers had discussed the potential need to pause or slow the process until lawmakers strike a deal over the government's debt ceiling. I mean, that's not even getting enough. I found myself last week when the market government was potentially going to shut down on Friday. It was almost a non-story. It wasn't. It was everywhere. But in the market, it really wasn't a function of what was happening. Years past, going up to the cliff that close would have freaked out the market. So it's interesting that the market is only assigning risk to certain buckets of what's going on in risk right now. This used to be a dramatic risk. The Fed is saying, you know what, this is a risk. We're going to stop shrinking the balance sheet until the government figures out their debt ceiling problems, and we go from there. Yeah. All right, let's check around some equities. Magnificent 7. Apple shares up by 1.2% right now. Up $2.59. Amazon up $1.17 right now. Nvidia up by 2.5%, but they're giving it back. Look at that. They just dropped $2. Jump over to Google, up 3%. Meta shares up by 0.8% right now. And yeah, how about this? The VIX back to a 19 handle. Very little volatility priced into this market, especially considering the rips we're getting in both direction. That's a nice bullish engulfing bar. We're getting in the S&P. We're going to get some volume as well. We got 22 minutes left. That is a sign of strength, man. That is. That's a bullish engulfing. You'll take out the last couple days, and we're going to do it on volume. We'll see how close we come, but we're going to get some volume at the end of today. That's for sure. All right, and you're going to hear this word more often as well. Stagflation. There's no denying it now, folks, okay? You heard it. The Fed hired their inflation targets, they lowered their economic growth targets, and they raised their unemployment target. The market's rejoicing today, but sometimes it's a case of careful what you ask for, man, because that is some dicey scenarios when you're going to bank on the Fed lowering interest rates with a dovish proposal on the idea that inflation is persistent and growth is slowing. Markets in positive. Stay tuned. We'll go over some more equities. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
About 18 minutes to go in trading, and you got markets trading higher yet again. We dipped down to 57.30. You're catching a second pop. We're at 57.47. How about it? S&P's up by 78 points, or 1.4%. NASDAQ 100, you're up by 1.7% right now. Dow up 1.1, and the Russell up by 1.7 as well. As we mentioned, yields dropping to about 4.25. The dollar shopping around at about 103.52, and gold up to 3,056 all-time highs, 3,061.60 on that gold contract on the heels of what? A dovish Fed statement. We have weakness in the economy. We have inflation persisting. We have unemployment going up. We have the Fed saying that they're recognizing that. And if you're recognizing that, when are the cuts coming? They're probably coming. Just not yet. We do get... we basically got quantitative easing, right? If you take away quantitative tightening, so the Fed comes in with quantitative easing, and they set the expectation, and the market reacts, and you got gold up there. And yeah, as we were talking to Elliot, right? I mean, Nugget, if you're looking to trade these gold companies now, like he was talking about, outflows of Nugget, can't blame it, man. From 45 to 60, you're up 33% if you just bought Nugget coming into this month, practically. Remarkable what the gold companies have done. And then you look at Dust on the flip side of that, the inverse. Now Dust is getting the inflows, right? After that reversal, and similar stuff with China. But man, I found myself looking at that saying, man, you know, you're trading some of these equities, keep your eye on some of these leveraged ETFs. You see the run that's possible. But boy, 35 to 60, yeah. You know, and I think gold's probably making a run to higher price, folks, but you're going to get some volatility. Okay, this has been a heck of a run. To put it lightly, it's been a one-way trip from 2,000 to 3,000. Even on the one-to-one expansion that I'm talking about, with a little bit of a pullback, all right, that's not the one I want. You're still talking about not even a 382 pullback. All right, yeah, not even a 382, right? That pullback we had in November didn't even get you to a 382 pullback, which is still a healthy pullback in a lot of runs, and we're making that second run. And you got to keep your eye on the dollar, because how's this market going to react to a weakening U.S. economy with potentially weakening yields and a weakening dollar? If that's the case, then you have the wind at your back in gold, right? Well, we'll see it play out. And, of course, a lot of headlines out there with Ukraine making their way as well. Not really playing into market action right now, but good to see some headlines with Zelensky talking to Trump, and positive comments is what you like to see there, with peace potentially on the horizon. And then this one just caught my eye. Are we gonna start policing the world for minerals? We just might. Check out this one. The Congo. They got a deal for Trump. Kick out our rebels, and you get the minerals. Well, He's got almost 4 years. He just started. We'll see what happens. Obviously on the heels of potential the minerals deal with Ukraine. That one from the Journal, an exclusive. And when was this out? Yeah, this morning. Out this morning. I was checking that out earlier. Yeah, Amazon up almost 1.5%. All right, so Elliot was talking about Micron. They have their earnings. I think it might even be today, right? Yeah, correct me if I'm wrong, but they're out with their earnings today. And you look at the type of volatility, as he mentioned, about a $10 move. Okay, of implied volatility on Micron, about a 10% move. And what is interesting here is that this thing trades in a $10 range. And, you know, this isn't a suggestion to sell it, folks. Because what can happen in instances like this is how you can break away from a channel. And maybe you come back and you test it as well. But how many times have we done it? Once, twice, 3 times. That might count as 4, 5, 6. This is the 7th time that we've bumped up against this channel line. You did break out of it. It's an art, not a science, maybe a little bit of linear regression. But it's interesting that $10 takes you right to the bottom of the range. But you can see how this likes to trade in $10 ranges, right? We got about a range here from about 90 to 100, 105, and Micron. They have their earnings. And yeah, look for about a 10% pop. And boy, you know, you line up volume as well. And look at how the volume trails off. Yeah, if I'm going either way, I'm going bearish on this thing, man. You're bumping up. Doesn't mean you can't be wrong, okay? We're all going to be wrong in the world of risk. But you look at where we are. Where's the volume on this chart, right? Well, of course we have volume on their earnings debacle in December. But what do you have it? You have it again in January, okay? You did get some volume at the high. That's real, February 18th. But then you get all this volume at the lows. And really what the alarm bells are is this is a daily. In the last 9 days, okay, look at the volume. Let me spike this up. I'm going to zoom in. That's not what you want to see. You got volume drying up, okay? You pop to a high of 102.78 on Friday. And this week, every day this week has had less volume than you had in the 6-7 days prior. Not really indicative of strength coming into their earnings from Micron. Go a little bit big picture. I mean, if you're looking to get in this equity, folks, I would look for a breakout of the channel and you come back and test it. Ode to our man Bud Rolfs, great host of TFNN in the past. He was the channel king, folks. And you always want to see the retest. You know, if this is really going to get a sign of strength here, because I don't know if this is your sign of strength you're looking for, right? We have a series of lower lows and lower highs. You're coming into earnings, and we'll see. But yeah, nonetheless, you're up by about percentage today for Micron. All right, let's see how some of the banks are trading on Fed Day. Yeah, rejoicing with the market. JP Morgan up by 2.3% right now. Bank of America up by 1.8. Citi up almost a solid 2 percentage point right now. Wells Fargo almost 2.75 percentage point in the green. And yeah, I was talking about the airlines this morning. Boy, these airlines, right? Now they're positive today, but I'd steer clear of these airlines for right now, man. And JetBlue's its own trip, okay? JetBlue, their chart is saying we got problems, but you check out the charts of Delta. That's a weekly. Let's put it back to a daily. There's no strength on this chart, folks. All right, you've come down, you've bottomed. Yeah, can you catch a dead cat bounce? Can you get a bounce here? Of course you can get a bounce going. But look at this. The last time we had volume, you accelerate into the lows we're at, and you get the volume trailing off. There's no buying in this market, especially for the airlines right now. Imagine you're an airline. Even with crude prices where they are, what do you have to deal with? The airline, they've come out and told us, right? Their earnings. Delta, they've come out. That's part of this escalation on Delta when they came out and said, hey, people are not flying. The demand is not there where we thought it was going to be. And now the Fed tells us inflation's going up from where we thought it is. The economy's growing slower than we anticipated, and unemployment's on the rise. Those are their forecasts that all change. So we'll pay attention here. Folks, one more segment. S&P's up 66 points, 10 more minutes until the closing bell. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out, like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com and hit Watch Tiger TV.
Welcome back, folks. S&P is up by 65. We got about 5 minutes to go. And yeah, great question. What's silver going to do, right? Is silver going to follow? Well, silver's not even at highs that we had in October, which is remarkable. You have silver actually negative 1% right now. We didn't even get above where we were at yesterday, which was $35 to the penny. Nice round number. And yeah, so we're negative right now. So, all metals not created the same, for sure. Gold getting the, as Elliot mentioned, a little safe haven, right? And gold up by another $16. You can see well above where we were yesterday, which is about $3,046. And then when you compare it to the highs that we had back out here in October, gold was at $2,800. We're $250 higher. We're almost 8 or 9% above where you were in October for gold. And you have silver. Yeah, made it to 35, a little bit ahead. But as you can see, just struggling to get above that area. So I wouldn't bank on it. I've talked about if you're looking for silver equities, Pan American's a good one, but even on a day like today, it's underperforming. Compare that to, I was talking about even this morning again, some of the other equities have been on a tear. New Gold's been on a tear recently. Harmony's been on a tear up to 1264. Yeah, was it AEM? Yeah, AEM's been on a tear. Look at that, AEM a little negative. You know what's great is on days like this, right? You're looking for equities you want to be in. On a day like today, see what's performing the best, see what's performing the worst. If you think that today is the vogue of where the future is going to go, right? If this is how the market is going to react, metals, yields, currencies, how are certain equities performing on days like that? And then take a look at them, follow them, because sometimes they perform differently, especially when you get into these mining equities, okay? Because the mining equities have currency exposure. So they're mining and all their expenses are in one currency. They're getting paid in U.S. dollars, so it's not always as easy as the price of the underlying. But, of course, it matters. And we finish it up with gold, $3,056. Folks, thanks so much for tuning in, finishing up your day right here. Stay tuned. Coming back for the 4 o'clock update, and I'll see you tomorrow morning at 9 o'clock. Have a great day, everybody. We'll see you tomorrow. Thanks, folks.
Building wealth